Hello, this is Sunil. In this video, I'm going to take a complete beginner to how to invest in a stock market. So in this video, I'm going to cover what is a stock market, how do you make money out of stock market, and how do you invest in stock market. So let's start with the first. What is a stock market? Let's take a simple example. You got a lemonade stand, and after a few days of working, figuring out how to make a profit, your company is making, or your small entrepreneurship is making a little bit of profit, and you want to plan to open a second stand or maybe a chain of stands. So you want to raise capital or you want to raise money so that you can buy more tables, cups, lemons, sugar, water, etc. So there's two ways of borrowing money. One is a traditional, which everybody knows. So you go to a bank and then you ask for a loan. The problem with the loan is you need to set with their terms. You'll have to return it sooner than what you expected. And the collateral, you need to show collateral. And then basically it's their terms, not yours. And also not to mention the interest is very high. So you might borrow $1,000 and you might have to pay a $1,500 or a $1,700 in a given time. So that's one way, is going through a traditional bank and asking for a loan. It could be a personal loan, a business loan, different types of loans, but it's one of the ways. The second way to think about is through an IPO. IPO is initial public offer. So you know your company is doing a lot of profit. So you tell public, this is how it's going to make profit. And this is a history of showing that it has made some profit. And you tell public, and the public will check your company. They will see how well you have done. And you say, I'm going to release 100 small pieces of the company as pieces of the company. So each can buy a share, or maybe let's say a trading card, for example. So you pay $10 for each share. So each share or a trading card has a part of the company, or you have a part ownership of the company. So as the company makes profit, the value of the company increases, so that does your share increases. So there's more demand and people are willing to pay more money for the same share or a trading card. So there's more demand, and then when there's demand is low, the price goes down. So stock market is a facility where it allows you to trade selling and buying. That's what stock market is. So everything you see, depending on what company you own, there's a place where, let's say I own Google shares. I want to sell Google 10 shares of Google. So I'll put an order with my brokerage to sell those 10 shares, and somebody else will buy that up, and the stock market facilitates those changes. So as an example, ARM recently launched an IPO. I think when they launched the IPO initial public offering, it was about $63 and they had about 18 million shares. So they raised 53 billion by those initial public offerings. So they use that money to show growth and then invest into further criteria. So that's what stock market is. So everybody can buy a piece of share and invest into it, and then you can hold on to it. So second point is, why and how do you make money out of a share? So there's two ways of making money. One is a very traditional way, capitals gains. So it's like a real estate or a property or a period of time. If the company is doing well, the value of the share goes up. So if you have 10 shares, which is worth £1,000 right now, $1,000 or £1,000 right now, in 2 or 3 years, it might have gone up to 2,000. So the difference between 1,000 and 2,000, you have made $1,000. So that's one way of looking at it. And the second way is also, some companies offer you dividends. So dividends is basically a thank you note saying that the company is doing really well. Every 3 months or every 6 months or yearly, they will give you a percentage of a profit. So keep in mind, the company don't have to give you dividends, but there's a lot of companies who've been giving dividends for like last 20 and 30 years. Coca-Cola, Walt Disney, to name some of them. So there are a breed of people who just buy company who like just getting good dividends. So as I said, the dividends is not necessary, but some companies tend to give. During pandemic, a lot of people didn't give dividends, keep in mind. But as long as the company is doing good, it's a good company. So dividends, in a way, you need to see it as a cherry on the cake. So it needs to do well and then do better than that. So you're looking for a growth company where you understand the market and then you invest into a property or buy some property shares, and then you hold on to it for a long term and you make money. So you make money through capital gains and you make money through dividends. So at this part, I just want to plug in Warren Buffett's video on what to buy and what's a strategy.
Of things. The best single thing you could have done on March 11th, 1942, when I bought my first stock, was just buy an index fund and never look at a headline, never think about stocks anymore, just like you would do if you bought a farm. You just buy the farm and let the tenant farmer run it for you. And I pointed out that if you'd put $10,000 in an index fund that reinvested dividends, and I paused for a moment to let the audience try and guess how much it amount to, and it would come to $51 million now.
So if you listen to what Warren Buffett said, there's two key things, right? One is buying index funds, SP 500 or a FTSE 100. I'm going to just get into what those are, and investing every month for a long term. So those two things, diversification or buying SP 500 and holding on for a long term. These are the two things if you can take away from that particular video. So what is diversification? So it looks like a lot of jargon, but what he's trying to say is like the saying, don't put all your eggs into one basket. So you want to, let's say you like Coca-Cola. If you put all your saving in Coca-Cola, if the company does well, you're going to make money. If the company doesn't make well, the value drops and you will lose all the money. So if you buy in a group of companies, even though the Coca-Cola might not do well, but the other companies like Google, Facebook, Microsoft, other companies might do well and you will still make money. So that's number one, is not putting everything into all your eggs in one basket. So SP 500 is 500 companies in US, like a FTSE 100 is 100 companies in UK. So number one rule, always don't put your all the eggs in your market. And the second thing is hold on for a long term. So there's always, the market goes and up. You want to hold on for a long enough time so that there is a value. So we covered what is the stock market, how do you make money, and how do you invest. So invest into an index fund. You can go to any other brokerage, look for index funds, and usually you're looking for the 500 or the really large cap or group of companies to invest in. Hope this was useful. And in the description, I'll also put in a spreadsheet which goes through all the things you need to be aware of, how to make your budget, save money, and how to invest that money into buying your first index fund. If you like this video, give me a thumbs up and subscribe to the video. Till next time, bye. Thanks.